Wall Street is finishing a turbulent trading week. Corporate reports and economic data on the one hand, and the hawkish Fed Reserve push market sentiment in opposite directions. The New York session today will not be easy. Investors will get insight into business sentiment. The benchmark stock indexes went down on Thursday in response to some downbeat quarterly reports, in particular Tesla and AT&T. The stock market closed the rough session yesterday in the red. The Dow Jones sank by 110 points, or 0.33%. The Nasdaq dropped by 0.8% and the S&P 500 fell by 0.6% to close at 4,129 points. The major indexes traded mixed in the New York pre-market. Market sentiment could change later as the market will respond to the events in the economic calendar. The S&P 500 is expected to trade in the intraday corridor between 4,080 and 4,170 points. On Thursday, stock investors again tried to figure out the path of the Fed's further policy moves. Investors are seeking signs of a recession in incoming macroeconomic data. Another piece in the puzzle is U.S. initial unemployment claims, whose number moderately grew last week. The business sentiment index by the Philadelphia Fed fell sharply. The evidence of a slowdown in the U.S. economy and the labor market in particular was offset by the Fed's policymakers. Besides, the insurance costs of the U.S. sovereign debt increased to the highest level in more than a decade because investors are worried about the lawmakers' moves to raise the federal debt ceiling. As for corporate reports and new quarterly reports, intermarket quotes of popular stocks and Tesla shares tumbled by 9.7% because the company reported the lowest quarterly gross margin in 2 years and signaled steeper discounts on e-cars. AT&T shares slumped by 10.4% because the wireless carrier fell short of market expectations in its revenue for the first quarter. American Express reported weaker than expected profits for the first quarter and its shares fell by 1%. Lam Research shares climbed by 7.2% because the revenue of the chip equipment manufacturer surpassed Wall Street consensus. According to the flash estimates by Refinitiv, the aggregate profits of the companies in the S&P 500 are expected to contract by nearly 5% on a year. After a mixed dynamic in the pre-market, futures on the U.S. stock indexes perked up in the early New York trade. Today, Procter & Gamble shares rose by 1% in the pre-market because the company upgraded its sales forecast for the whole year amid higher retail prices. Tesla shares grew by 0.9% because the company raised price tags for its premium e-cars of Model S and X. Though there are still 20% lower than the prices of the early 2023. ARK Invest, an asset management firm run by Katie Wood, bought a stake of Tesla after the shares stumbled on Thursday. More high-tech U.S. companies are due to provide their corporate reports next week. PMIs by the S&P Global looked growth in April, defying the forecast for weaker readings. Later today, member of the Fed Board of Governors, Lisa Cook, will make her comments. The US dollar index regained its footing before the opening bell. However, it skidded in the early New York session to 101.75 and 0.16% down. The index is expected to trade in the intraday corridor between 101.30 and 102.20. The greenback opened today in the confidence, and also dive of the pound sterling due to a decrease in retail sales in the UK benefited the US dollar. On the other hand, a recovery in the Eurozone's economy in April supported the euro. Despite sluggish trading today, the US dollar index has a chance of closing the week with gains for the first time since late February. Indeed, the US dollar could find support from comments by member of the Fed Board of Governors, Lisa Cook, because she is likely to be on the same page with the other policymakers who underscored stubborn inflation. Fed funds futures indicate that most investors predict a rate hike by 25 basis points in May. In theory, this is bullish for the US dollar. Shortly after, the US Central Bank is expected to begin a series of rate cuts amid a slowdown in the domestic economy. On Thursday, a weekly update on US unemployment claims exposed the signs that the labor market was cooling down. However, today, PMIs came in beyond expectations, so the US dollar might gain ground intraday. The Canadian dollar is extending its weakness on the back of falling oil prices. The USD CAD is trading at 1.3520, 0.4% up from yesterday. The intraday Canada for the currency pair is seen between 1.3350 and 1.3590. Today, oil prices are recovering and both benchmark rates have already grown by 0.3 and 0.6%. Nevertheless, a blow delivered earlier is still putting a strain on the commodity-reliant loonie. And today, the loonie was hurt by fresh macroeconomic data on Canada's retail sales. The data signals a waning demand. In turn, this could assure the Bank of Canada to hit a pause button on a monetary tightening. According to flash estimates, Canada's retail sales declined by 1.4% in March, following a mild 0.2% drop in February. The fresh reading is much lower than the expected 0.6% fall. This data may convince the Bank of Canada to put interest rates on a hold. Thus, will increase the gap between interest rates in the United States and Canada. All in all, the Canadian dollar has weakened by almost 11% against its American rival since June 2021, when inflation clicked into gear. However, the loonie has grown by 0.6% since early 2023. The crypto market is trading sluggishly today. Top tokens are trading mainly lower. Today, Bitcoin is making efforts to settle above 28,000 as it did yesterday, and the token lost about 0.15% intraday to trade at 28,180. Ethereum, Solana and Ripple shed from 0.3 to 0.13%. Litecoin has climbed by 1.2%. Bitcoin went down because of a mixed economic forecast, recession fears, the hawkish Fed Reserve, and the campaign for crypto regulation in the United States. As a result, Bitcoin sank by almost 9% from a multi-month highs at 31,000. Analysts at the block presented a bearish short-term outlook for the flagship crypto. When the price drops to 28,000, traders will buy the token at lows. And now the price is below some key short-term support levels, so Bitcoin is expected to fall to $26,500 and $25,200 as a downward correction. On the plus side, the crypto is benefiting from technical indicators and the ongoing market cycle. These factors indicate that the bear market is over. Most investors believe that Bitcoin will enjoy the bull market for the whole of 2023. As for the intraday outlook, the price is likely to trade sideways within $27,900 and $28,300. A breakout of the borders could push it down to $27,200 and up to $29,100. So make profits with the InstaForex, subscribe to our channel and see you online next week. We wish you profitable trading and have a nice weekend.